Hello everyone and welcome back. My name is Greg Furman and this is the Forex Weekly Outlook for the week of July the 24th, 2017. Now to get started this week, we're going to begin where we always do with that all-important US dollar index. Now what I've talked about over the last several weeks is dollar weakness. Prior to the big move in the dollar, basically we've already forecasted it with the VantagePoint and that's going back into basically the middle of June where the first real strong signal came that we were going to continue to move lower. Now, what I had talked about in last week's Forex Weekly Outlook also was this significant potential swing low support sitting at 95.50, and if that area breaks, we're going to go lower. So that is what happened based around that triple EMA cross from VantagePoint. However, now we're coming in to what potentially could be the final leg for the dollar move. If we break through this, then the dollar is likely going into a long-term trend reversal. I think that really, to be honest, has been in progress since the middle of December 2016. We've moved down, back up, but then down again, and you can see that we just continue to make these new legs to the downside. Now, despite rate hikes and everything else. So when we look at this right now for next week, about the 93.50 area, pretty much where we're at now is a make or break area for the US dollar index. Now, if the dollar cannot hold this area, then we are going lower. So from here, guys, once we've identified that potential area that could be a problem area down here at 93.50, we look to the additional indicators from VantagePoint. Now, what I will point out, we are at 8.1 on the predicted RSI. I don't recall a reading ever this low. So to say that this is oversold would be an understatement, but the primary trend is clearly down. Now, if we're going to retrace, that is going to be back towards the 95.13, the VantagePoint 18-day predicted moving average, and then we're likely going to start our next move down from there. So we could see some dollar strength over the next week. But again, that would be based on a short-term move. The primary trend is still down. Now, if that dollar does base out here at 93.50, that would put it that would stop the euro rally right up around 117, maybe 117.50. But at this particular time, I'm not convinced that that's going to happen. The key indicators from VantagePoint are still pointing higher, but we're at 87.4 on the predicted RSI. We are absolutely moving towards overbought here. So you can see how we tie that into the dollar index. And again, if that dollar index can recover, then that will put downward pressure on the euro and indirectly upward pressure on US Swiss franc. Now, in last week's Forex Weekly Outlook, again, I talked about this tight channel we're in, and if this channel breaks, we want to get shorts in right away. Leading indicator, that triple EMA cross, the 3-day crossing over the 8-day and the 18-day predicted moving average, was a leading indicator that this channel was going to break to the downside. So we can see our predicted short, medium, and long-term differences still pointing down. But again, 15.3 on the predicted RSI, where we are getting to oversold territory. So if the dollar index does bounce off 93.50, US Swiss franc will also bounce higher. Now, when we look at the British pound US dollar this past week, still a pretty good move. We've topped out here around 131.50, but what we can assess here is that the key VantagePoint 18-day predicted moving average, 129.48, has been tested on both Thursday and on Friday, and it is held on both occasions. Now, the Neural Index has turned higher, but my concern with this, based on the indicators, is the medium term crossing over the long term predicted difference to the downside. So that is definitely worth a mention here, that we could see the pound weaken, but if we lose 129.48, that will lead to a bigger move. But I would look for the RSI to be at the very minimum below 50, and more importantly below 40, before we see any real downward momentum on this particular pair. Again, we've got the Brexit we're going into. In my respectful opinion, the Brexit is a good thing, not a bad thing here, guys, for the UK. I can't believe it took them this long to break away from the European Union, but there's still going to be some resistance there, but overall I think the pound will recover. Now, as we come into the dollar-yen pair, again, this was a trade on this past week on Trader Planet, and again, we've had this 3-day crossing over the 18-day predicted moving average. We broke through 112.43, and basically we can assess here that we've had multiple retracements back to this VantagePoint 18-day predicted moving average, and each time we were sitting there just waiting to sell this thing. So once again, this week is going to be another make or break area for the dollar yen. Now, if we continue to move into a risk-off environment, and I will point out that of the global equity markets, the only one that is showing strength is the S&P 500. The Nikkei is down, the DAX 30, the CAC 40, they're all the Nikkei all down across the board. So that's why money is going into the yen here, guys. The key intermarket correlation to understand. Now, our predicted short, medium, and long-term differences, our key VantagePoint strength indicators are still pointing down, but I'd like to see us cross over this zero line on the predicted MACD before I get too excited about further shorts here below 111. So to start the week, our key level, it starts at actually 111.66, the 3-day, and resistance goes all the way to 112.43. Now at 112.43, if we break above that, that would, at least in the short term, take the pressure off the downside. But I think right now we still have a little more downside to go before the dollar yen recovers. Now, as we move into our main commodity currencies, they are again here, guys, I cannot stress this enough. In my respectful opinion, the Bank of Canada has this dead wrong. By hiking rates, they've hiked rates with saying that the labor markets have recovered in Canada. That's not true. They're saying that the slack from the oil, the low oil prices has been cleaned up. That's not true either. Most of your western provinces in Canada are under considerable pressure here because of the job market and the fact that the oil is down. So when I look at this, 5.6 on the predicted RSI. To say that this is grossly oversold would be an understatement, but I will point out here, and again, to the credit of the VantagePoint software, when we banged up against their key 18-day predicted moving average, we were basically moving into oversold at that territory, and we still went from 132 all the way down to 126. Now, nothing goes straight up and nothing goes straight down here, guys. But to say that this pair should correct higher would be an understatement. So any corrective move this week is likely going to be held at the 128.10 here, which is that key VantagePoint 18-day predicted moving average. So we're looking for the market to retrace a bit, somewhere between 126.57 and 128.10, so we can reset those shorts. But I would be very cautious with shorts down at this level, respecting the oversold condition of the key VantagePoint indicators. Now, the final two pair here, I've talked about them over the last week. There's been some very good opportunity here, guys. I talked about this wedge, this tight trend line that we had. And if it breaks above it, just go long. And buying that based around that 3-day crossing the 8-day predicted moving average, the additional indicators from VantagePoint, when you connect the dots to a trade like this, and remember, we've done this ahead of this move, long before Aussie US ever moved to this extent, we were already in the process of buying this based around the VantagePoint indicators, our 3-day crossing our 8-day and 18-day predicted moving average, our predicted differences breaking above the zero line, the crossover of the predicted MACD, and my personal favorite, the break of the 60 area on the predicted RSI led to significant momentum building on this particular trade, but we've had a big run up, probably going to cool off a little bit this week. The key VantagePoint level, 77.59. We're looking for a minor retracement. I'm not absolutely convinced we're going to make it that low. I would say 78.53 is a pretty decent area to look to start buying this thing again off that 8-day predicted moving average, but anywhere between 78.53 and 77.59 is a very good buying opportunity for next week, in my respectful opinion. Now, our final pair, New Zealand US, basically follows Aussie US here, guys. But the key thing, when I talked about this significant resistance last week at 73.50, I discussed that if it breaks above this, we would be buying high. Most traders will not buy high and they will not sell low. But you can see that using the VantagePoint software, that triple EMA cross, the additional indicators, the neural index, the predicted short, medium, and long-term differences with the predicted MACD and the RSI, there is no reason for us not to be buying this. So Right now, next week, 73.15 is the key level. We're closing out at 74.15. Buy zone for next week, guys, between 73.65 and 73.15.